Alrighty, so we are taking a look at Tesla stock today, and let me tell you, there is a ton to go over, both from a macroeconomic perspective, but also we're going to look into the technical aspect of the overall markets and Tesla stock as well. So I highly encourage you guys to watch this video in its entirety, especially if you're trying to get an understanding of what's going on with Tesla stock, but as well as the overall economy, right? So there's a lot to go over, and I want to start off this video by just showing you guys a photo of a heat map from today where we see that there was a lot of red in the overall markets. A lot of stocks closed lower, and so we're going to go ahead and talk about that. Now let's go ahead and just pan over to the price action for Tesla real quick and parse through in a shorter time frame, a 5-minute time frame, and we'll talk about the price action that we saw for today. So if you actually notice, we see that there was a lot of selling pressure in the pre-markets, right? So before the markets even opened, stocks pretty much started selling off, and as the bell opened, we saw that things pretty much moved sideways, and it wasn't towards the middle of the day where Tesla pushed up a bit, and then towards around 2 o'clock or towards the end of the day, we started to see the markets pretty much sell off. Now this is actually something that we saw not only just in stylo with Tesla, but as well with the overall S&P 500 index ETF SPY, where we see again the same pattern where things sold off aggressively before the bell opened. After the bell opened, we moved sideways, slanted, going down for a bit, but it wasn't until 2 p.m. towards the end of the day where we got more selling pressure. So let's go ahead and talk about why we saw a lot of selling for the overall markets, as there's a lot to go ahead and cover, and then we'll go ahead and really just round ourselves back into looking into the price action for Tesla, right? So first off, I want us to look at the economic data that we got this morning. So this morning, we got the U.S. jobless claims. Now, this is a weekly economic report, and this is different from the unemployment report, right? This is actually people filing for unemployment. And what we saw is that it fell down to an 8-month low, right, where we see businesses are avoiding layoffs. Now, this may be confusing for a lot of individuals and market participants because typically when you see less people getting laid off, well, that is a good sign for the economy, right? Because obviously people are working, well, they're getting their paychecks, and that they could go ahead and spend their money and the economy can grow. That's all good, but I want to go ahead and explain why this is actually pretty bad, and we'll tie it in with some other data as well. So if we actually scroll down, we see that in October 2022, that's when we started to see it kind of really ramp up, where we saw a lot more layoffs. However, recently things have been cooling off, right? We're seeing less layoffs. Now, why is this a concern, right? We don't want people losing their jobs. Obviously, I don't want people losing their jobs. But the concern here is that the Fed is still fighting inflation. Yeah, they paused rates in yesterday's meeting, which is something I said they would do about 2 months ago. I've said this for a while, way before a bunch of market pundits started to agree with my analysis on what the Fed was going to do. I said this for a while, and I don't say this to give myself a pat on the back. It's really to just highlight that we're really looking forward to see what's going on, because we take a holistic approach of what's going on in the overall markets. Many market pundits really just look at things from a dimensional or one-dimensional perspective, while I try to look at every aspect of what's going on. And so I want to go ahead and tie into what we talked about in yesterday's video a little bit, where we talked about the Fed's pausing, and we also got the summary of economic projections, where we got an update on the dot plot, where every single dot represents a member of the FOMC and where they actually see the federal fund rate going. Now, what we saw for 2023, interestingly, was that there was a lot of unison between the FOMC members. In fact, 12 out of the 19 of the members expected one more rate hike for the year of 2023. So that's pretty interesting. Obviously, as we go into 2024, 2025, there's much more dissent, where a lot of them disagree and they have their numbers all over the place. But right now, we see that most of them are expecting one more rate hike. Now, these are the people who make the decision on whether or not we should hike rates. And so that's pretty concerning, right? Because we know that the Fed is still trying to fight inflation. We see that jobs or layoffs are cooling off, so that means people can still get paychecks and spend money, which can contribute to inflation ticking upwards. And so that's pretty much scary for the markets. Now, something else we want to pay attention to is something I've been telling everyone, not only members of the Push and Profit private group, but also publicly on YouTube, that we want to pay attention to the 10-year Treasury. I know it sounds boring. People just want to talk about supports and resistances and lines on the chart. But let me tell you guys, stocks don't just move and really adhere to the squiggly lines on the chart. You have to pay attention to, the fundamentals of a company, but also what's going on in the economy. And so when we see the 10-year Treasury at these high levels, what does this mean for the markets? Well, as an investor, think about this. If you're someone who is an investor and you have a ton of capital, why would you deploy that capital into stocks, which are risky, right? You don't want to put money into equities when you don't know if they're going to go up or down, when you have the 10-year treasury pretty much at these high levels at 4.495%, meaning you could go ahead and park your money in here and the government's guaranteed to go ahead and pay you this amount over here. Right? Why go ahead and risk it in a company where you don't know what's going to happen when you have this guaranteed return? And so this causes selling pressure for stocks. This is something I've said for a while, and we want to pay attention to that, as that's not good for stocks. So we talked about the jobless claims, we talked about the 10-year treasury, but there's something else that we got today, another economic data report that we got today that I want us to really take a look at. And so what we got today was the leading economic index. Now this was a huge report that is rarely spoken of, but I think it's important to pay attention to this. Now for those of you guys that are unfamiliar with the leading economic index, let me go ahead and break down what this exactly is. So it's basically an index that is composite. It's this composite index designed to signal peaks and troughs in the business cycle. And so it's made up of a variety of economic indicators that tend to change before the overall economy does, right? And so by monitoring the leading economic index, analysts, policymakers, and market participants, all of us, we could kind of get a sense of the future state of the economy, because it helps us make informed decisions. As its name implies, it's a leading economic index. It kind of tells us what usually happens before it actually happens. And so let's go ahead and actually look into this a bit deeper, because we want to go ahead and actually show you guys the data and what this means. So these are all the items that pretty much contribute to the leading economic index. And as you can see, the higher up it is on the list, the more weight it has, and the further down on the bottom, the less weight it has, right? And so one of the things we see is the ISM new orders, and we see that actually going downwards. Now what is that, right? Because if you're unfamiliar with looking at this data, this could seem confusing. You're like, well, what does this mean, Justin? Well, let's go ahead and actually break down some of the items, right? So the ISM new order, this is a measure of new orders for manufacturers. And so naturally, a high ISM new order index would suggest that manufacturers are receiving more data, more orders, sorry, and that could be a sign of an expanding economy, of course. If you're receiving more orders in your business, that means your business is growing. And so naturally, if manufacturers are receiving more orders, that's a sign that the economy is growing. But inversely, if it's going down, I don't think I have to tell you that could just means that there's a contraction in the economy, right? Then, of course, we have consumer expectation. I don't think I have to go over that one. I think that one's pretty self-explanatory. We also have the interest rate spread. And this is something that's also important to watch, because it's the difference between the short-term and long-term interest rates. This is where you start hearing the yield inversion curve and things of that nature, right? And so a widening interest rate spread often indicates that investors expect strong economic growth and are demanding higher returns for long-term investments. And a narrowing spread could be a sign of economic slowdown. And so that's something that we want to pay attention to. But of course, more importantly, the leading credit index. Now, this is something that is a huge issue right now, and this actually ties into Tesla stock just as it ties into the overall market. So what is the leading credit index, right? So the index is a measure of the relative ease or difficulty of obtaining credit in the financial markets, right? And so a favorable lending credit index suggests that credit conditions are loosening, right? And when credit conditions are loosened, that could stimulate the economic activity, right? People could get credit, they could go ahead and spend that money, and that grows the economy. On the other hand, a deteriorating index where things are going downwards, that could indicate tightening in credit conditions, which is signaling an economic downtrend. This is why, we're seeing the leading economic index pretty much contract, because what have we been seeing, right? And it's been falling down consecutive, I believe, for 16 to 17 months. So it's been telling us that, hey, we're entering into a recession. Now, yesterday, what was very notable is that we heard Jerome Powell for the first time mention that the baseline is not a soft landing, meaning that we could very well go into a recession. And this is something I've been saying for a while now. However, we finally had Jerome Powell say, no. While the Feds have for a while been saying that, yeah, we may have a soft landing, now he's confirming, well, that's not the baseline, and it's a possibility, but it's not guaranteed. And so what we're seeing is that it's hard to get credit. Credit is very tough to get. And right now, with rates elevated, that's a huge issue. And this ties into Tesla stock because guess what? Right now, even if you have stellar credit, for example, I have a credit score around like 825, it fluctuates around there, and that's considered outstanding credit. But even an individual like myself with that credit score, I would still pay around 7 to 8% just to finance a new vehicle. And so there's a lack of an incentive to buy a new car. Why do I want to buy a new car when it's almost unaffordable? I mean, I bought my car in 2016 and interest rate was 4%. And at that time, I thought that was high. Now we're at a time where we're double that. And so that's putting a lot of pressure for companies like Tesla. It's harder to finance a new vehicle, especially when rates are high. And so with that said, I want us to now just take a look or get away from the macroeconomic environment, but let's go ahead and take a look at Tesla stock's price action and overall the S&P 500, right? Now, before we actually break down Tesla, I want us to take a look at the overall S&P 500, massive selling off. And this is pretty scary as we're entering into this area where there's very little volume relative to price, where we see this volume pocket. And of course, if there's very little volume relative to price, that means that there's less of an exchange between buyers and sellers. And that means that there's sellers, well, that could push down the order books, right? Especially at these levels over here. And inversely, when there was buyers, well, guess what? It pushed up the order books, but now things are going downwards. And so we could see the markets fall down a bit more. And in fact, if we actually take a look from a weekly view, what we see is this little gap right over here. Now, gaps are not always going to get filled, but the idea is that eventually they end up getting retraced and getting filled. And so we still have potentially a little bit further to go before this gap gets filled for the overall S&P 500, which is something I shared with the Push and Profit private group. Now, real quick, if you guys want to have access to the Push and Profit private group, where every single day I send out trade ideas as well as go over what's going on in the overall economy and in the markets and what stocks I'm looking at, make sure to check out the first link in the description below, but also make sure to check out the pinned comment as well in the comment section below, because I have a free weekly market pulse insight where every single week I send out an email talking about what's going on and what are some things we should pay attention to. And again, it's free, right? So definitely take advantage of that. Now, let's go ahead and get away from the overall S&P 500 and finally really talk about Tesla. Now, Tesla is another one where, and let's go ahead and look at a daily view. We see that we're at this area where there's a lot of volume relative to price. So again, what happens when there's a lot of volume relative to price? So it's different from when there's little volume relative to price, because again, little volume relative to price and there's buying pressure, it pushes up. If there was selling pressure, it would push down. But when we enter in this area right over here, there's both ways, buying and selling, a lot of trading going on. And what we saw last time was when Tesla was around these areas, Tesla pushed up, then it pushed down, then up, then down, then up, then down. And it wasn't until we had the catalyst event where we had one of the analysts from Wall Street finally say, hey, maybe we shouldn't just look at Tesla as just an automobile company and actually look at it as a tech company, right? But now we're approaching this area once again, right? And so that means that we want to pay attention to this area because either we're going to bounce above from it, right, as it acts as an area of support, or if it breaks below it, well, that could be a little bit scary. And now we're seeing that Tesla once again got rejected by this descending trend line. This is a trend line that I said has been prominent for Tesla for a while now, where it's gotten rejected several different times. And so, this is something that I've been really talking about, and I saw some individuals in the comment section say, hey, I've been watching your videos, and every time Tesla hits this area right over here, I end up shorting or I end up selling calls or I end up buying puts. I mean, there's so many different ways to pretty much approach the market, and at the end of the day, you have to just find that whatever you see value in. Now, I'm someone who I invest in Tesla in the long term, but I also trade Tesla in the short term. And so if Tesla breaks below this area right over here where there's a lot of volume relative to price, I'm going to go ahead and hedge my long-term portfolio by shorting Tesla, by either selling calls or buying puts or possibly just shorting the shares. I mean, there's several ways to approach the market, and that's what I'm doing to hedge my long-term position. And then what I'm going to do to buy into Tesla for my long-term position? Well, it's very simple, right? I do this all the time. When Tesla sells off aggressively, I just don't buy at any dip because the dip can always get dippier. And so what I want to do is wait for that sign where we see that sell-off. Then we see that confirmation that things are going back up, and that's where I last time bought some Tesla. Now, if Tesla falls down again, I'll do the same thing. I'll wait for a lot of selling to take place, and then I'll wait for a sign of confirmation where if it starts bouncing up, then I'll add more into my Tesla portfolio, right? So definitely something that we want to pay attention to as we are approaching this area. And we don't have any updates on the fundamentals. The fundamentals heavily influence the stock or particular securities, but we don't have much updates. We don't get an update on the fundamentals of Tesla until we get the delivery numbers that come out next month. And then of course we're getting closer to Q3, but things from a fundamental perspective may look bad for Tesla. And this is something I've said for a while now, that going into Q3 and Q4, it's going to be a bit of a challenge. Now, of course, I do expect that when the Cybertruck news does get announced, that's going to provide a little bit of relief for Tesla, as that could be a positive catalyst event. But we don't know when that comes out, and we'll have to just await. So definitely a time to be patient, as being patient is always rewarding. One of the things I actually told the Push and Profit private group this morning was that I wasn't actually going to take any trades today, as things pretty much were moving sideways. It's best to sit out. The only people who make money when the market's moving sideways are two people. Individuals who are obviously doing credit spreads, which are a little bit more, you have to be a little bit more savvy to pretty much understand that. I do have a video somewhere on this channel breaking down how to do that, where basically you're writing options and you're taking advantage of time decay, but I'm not going to go into the specifics of that. And also individuals who just sit out, right? When there's no move, you don't have to take action. It's only when you actually see an opportunity present themselves. For example, towards the end of the day, I asked the private group, what trades did they do today? And one of them mentioned that they took a position in SQQQ, which is the inverse for the S&P 500, where when the SPY falls down, SQQQ is the index for Nasdaq, is the inverse for Nasdaq. So let me just rephrase that, right? Little slight hiccup right there, but it's relatively the same thing, where I asked the Push and Profit private group, and one member said that while the market was falling down, they took advantage of taking a trade in SQQQ, which is the inverse. When the markets go down, it goes upwards. And so there's always opportunities, except, when things are moving sideways, I try to stay away. But towards the end of the day, there was definitely a great opportunity to take advantage of the uptrend with the markets going downwards and taking advantage of the inverse. Now, if you guys want to know more about inverse ETFs, make sure to check out this video right over here. And if you want to learn more about volume profile, make sure to check out this video right over here. And I'll see you guys on that next video. Take care, guys.